My name is Olivia, and I'm going to be talking about the financial management strategy for Coca-Cola. So, in my calculations, I found that the financial leverage for Coca-Cola changed from 1.87 in 2023 to 1.92 in 2024. Basically, this just shows that Coca-Cola has taken on some more debt, which slightly increases their risk. However, in terms of the industry and their competitors, Pepsi is reported to have a financial leverage ratio of 5.51, which means they're in more debt and at higher risk than Coca-Cola. So with that being said, Coca-Cola seems to be doing pretty well in their industry. Now we have our strategic profit model for Coca-Cola. So to start, our profit margin decreased from 23.42% to 22.59%, which is not great. However, the net sales increased pretty decently, which is good. However, the net income decreased by $83,000. So Coca-Cola is on the higher end of the profit margin, with the industry average being 18.0. So they do have a large margin, but obviously we would like to see an increase per year. Next, we have the asset turnover, which, due to my calculations and the information I found, it remained the same. However, I have a feeling that this might not be correct. As of the second quarter in 2024, the non-alcoholic beverages industry reported an asset turnover ratio of around 0.59. So basically, every dollar of assets, the industry generated approximately 59 cents in revenue. Coca-Cola's ratio is slightly below this industry average, which suggests that they have a moderate level of asset efficiency. They obviously could work more towards being more efficient. And then lastly, for the strategic profit model, Coca-Cola's ROA has decreased from 10.97% in 2023 to 10.57% in 2024. This is a slight decrease, so it's not anything too concerning, but obviously it is not great. The industry median here is 7.1%, which means Coca-Cola is not the most asset efficient and has some work that they could be doing. The ROE has also slightly decreased from 13.31 to 13.36. And the typical average ROE in the industry is 29.67. Then here we just kind of wrap everything up. So Coca-Cola has a financial leverage ratio of 1.92. This means that for every dollar of equity, Coca-Cola has 1.92 in assets, indicating weak to moderate leverage. Coca-Cola relies pretty heavily on debt financing to support their operations and investments. And while this can enhance returns during good times, it also puts them at more risk for financial downturns. Coca-Cola's leverage is lower than Pepsi's, which shows that they have a more conservative capital structure about how they spend their money and where they put it. They have strong credit ratings and consistent cash flow generation, which allows it to maintain healthy debt levels without overextending itself or putting itself in a dangerous position. Coca-Cola has an excellent profit margin, well above the industry average of 18%. Their asset turnover indicates a moderate efficiency in using its assets to generate sales. However, obviously, there's always room for improvement. They could definitely be more efficient. It is lower than other fast-moving consumer goods companies. Also, their ROA is above average in the industry, which shows solid efficiency in turning investment into profit, which is very good. That's what we like to see. Coca-Cola demonstrates strong strategic profitability by using a high-margin, capital-light business model. Basically, it maintains moderate financial leverage while also maintaining those high margins. In summary, compared to its peers, especially its competitor Pepsi, Coca-Cola is one of the more stable, high-performing companies in the beverage industry. Thank you for your time.